Hi everyone, this is Shaurya and you're watching Money Time at Money9. Well, today's Money Time can be considered RBI time because it is dominated by the news coming from RBI. So let's begin. We start with some of the highlights of RBI's monetary policy review. First, the RBI has raised the repo rate by 50 basis points to 4.9%. The Governor Shaktikanta Das said that despite rate hike, it is still below the pre-pandemic level. Banks are expected to follow the suit and further raise the lending rates for home loan, auto loans and personal loans, which will make them costlier. The RBI governor also said that it has raised the inflation projection for the ongoing fiscal by alarming 1% to 6.7% from 5.7% earlier. Das has also said that RBI intends to withdraw accommodative policy to tame inflation and support growth. Next, from RBI policy, Governor Das said that central bank is retaining India's GDP growth forecast at 7.2% for the current fiscal. Although, on Tuesday, the World Bank has reduced India's GDP growth projection by more than 1% to 7.5% from earlier 8.7%. The RBI governor also released GDP growth projections for different quarter for the ongoing financial year. For the first quarter, the RBI has projected the GDP to grow by 16.2%, apparently due to the low base of the previous year because it had second wave of pandemic at that time. For the second quarter, the RBI has projected the GDP to grow at 6.2%. For third quarter, it expects GDP to grow at 4.1%, while in quarter 4, it expects the GDP to grow by only 4%. And for some views on the bond yields, HDFC Bank Chief Economist Abhik Barua said that the ongoing rally in bond yields is short-lived as crude oil prices are at elevated level and global bond yields of different government securities are also on the rise. The yield on 10-year government bond fell sharply 0.32% to close below 7.5% mark after RBI had hiked the rates. Next up, as inflation soars, household savings dip. A worrisome trend has been reported in the savings pattern of households by Business Daily. The report says that the proportion of savings of households out of their total disposable income has fallen from more than 33% in 2012-13 to less than 28% in 2020-21. Although overall savings has increased in the last 10 years, but households are increasingly keeping their savings in deposits at a much higher rate than the rate at which they are transferring their savings to social security schemes. While in 2021, households deposited 6.3% of their savings in various types of deposited, but they deposited only 2.5% in pension funds, and this trend has only increased in the last decade. This is creating a lot of problem for government to create a pensionable society. And now for some news on UPI. The RBI has proposed to link UPI payments with the credit cards. So far, the UPI payments were only linked with the savings and current accounts through user's debit card. The RBI governor said that first, RuPay credit cards issued by National Payment Corporation of India will be enabled with this facility. Later on, credit cards of different companies like MasterCard and Visa will be allowed to link with the UPI interface. UPI has become the most inclusive mode of payment in India with over 26 crore unique users. In May, 594.63 crore transactions were processed through UPI. And something more on ease of payments. If you are frustrated by continuous requirement of entering OTP to initiate any transaction, then there is a good news for you. The RBI governor has also said that customers will not be required to enter OTP for auto debit transactions of up to 15,000 rupees. Plus, the RBI has also made it mandatory for the banks to issue notification regarding the auto debit transaction 24 hours in advance to customers. Earlier, the banks were allowed to process auto debit transactions only of up to 5,000 rupees without OTP. According to experts, this is expected to benefit people who use auto debit transactions while paying subscription fees, education fees and insurance premium. Next up, some government action on fake profiles. The IT Minister Rajiv Chandrasekhar has asserted that government has zero tolerance towards those who make fake profiles to commit online crimes. He gave a stern warning to internet-based companies to store customer data for at least 5 years. He said that internet-based firms should be in a position to produce data and information about any user guilty of using their platforms for any mischievous activities like hate speech, violent content, etc. On gaming industry, the minister has said that discussions are going on to have central level rule or law to oversee gaming in the country. And now for some market news. Equity benchmarks extended their decline for the fourth straight session on Wednesday, with the Sensex falling 214.85 points after Reserve Bank of India raised interest rates by 50 basis points. The broader NSE Nifty declined 60 points or 0.37% to finish above 16,300 points. From the Sensex pack, Bharti Airtel, ITC, Reliance Industries, Asian Paints, IndusInd Bank, ICICI Bank and Kotak Mahindra Bank were the major laggards. Elsewhere in Asia, markets in Shanghai, Tokyo, Hong Kong ended higher while Seoul settled lower. European markets were trading mostly lower during the afternoon trade. Meanwhile, international oil benchmark Brent crude jumped 0.93% to USD 121.69 per barrel. And now for news on Paytm. The brokerage firm JP Morgan has gone overweight on Paytm. It has cut the target price from 1200 rupees to 1000 rupees. The brokerage has said that the Paytm's operating margin has constantly improved in the last 2 quarters, and it expects that the fintech firm will fairly remain on growth path from here onwards. In November 2021, Paytm launched India's biggest initial public offering of 18,300 crore rupees. Till then, the stock has fallen over 70% from its IPO price of 2,150 rupees amid meltdown. And now let's come to the last news of the day, which is coming from the eVehicle segment. eVehicle's Hero MotoCorp backed E2W manufacturer Ather Energy. It has said that the customers can purchase its E2Ws on EMI of as low as 251 rupees by applying for SBI Easy Ride loan from the public lender. Customers can apply for the instant loan on SBI's mobile app YONO. They can also visit branch office for the same. Depending on the credit profile, the rate of interest starts from 9.55% per annum. That's it for today. Hope you like this, and for more such content, follow Money9 on YouTube, Facebook, Twitter and Instagram.